I'm Natalie Archuleta. Today I'm going to be talking about credit. Everybody loves that topic, right? Well, if you're in the market for real estate, it's a very important topic. So just to start, I want to talk to you a little bit about what makes up a credit score. There's several things, about 5 different aspects that make up the credit score. The biggest one is going to be payment history. So payment history is very important. What that means is you want to make your payments on time. If you have late payments, that really hurts your score, especially if it's on the type of credit it is. If it's a mortgage, it can really hurt you for a long period of time. It can cause you to not be able to purchase another home or refinance until 1 to 2 years have lapsed. So auto loans, credit cards, you just want to avoid making your payments late. It's the quickest way to drop your score, and then once your score drops, it takes a little bit of time to get it back where you want it to be. So make sure you make your payments on time. Anything that's attached to your credit, you want to make those priority and make sure you pay them by their due date. The next biggest part of your credit is amounts owed. So what this means is when you apply for a credit card, you'll get a credit limit. You don't want to use that whole limit. You want to use only 30% of your limit or less. So the quickest way to increase your score, if you're trying to qualify for a certain program, or if you're just wanting to set a goal for your credit and hit it, the quickest way to increase your credit score is to utilize your credit, but only use 30% or less. And then when the bill is due, pay it down to $10. Don't pay it all the way off. Pay it down to $10, let $10 roll, and you'll notice your score will jump up pretty quickly. So it's the quickest way to raise your credit, but using the 30% or less is best to keep your credit score healthy. The next largest section is length of credit history. This is an important one. A lot of people don't realize that closing credit accounts can hurt you, can hurt your credit score. So the way they get your length of credit history or your credit age is they'll take your oldest credit account with your newest credit accounts, and then they average it, and that's your credit age. So if you have credit accounts that you've had for years and years and years, don't close those. You don't have to use them, but don't close them. Try to keep them open because if you close your oldest accounts, that shortens your credit history, your credit length, which will reduce your credit age and lower your score. So keep those cards open even if you're not using them. The next 2 are kind of equal in making up the last little bit of your credit score. Types of credit. So the credit bureaus like to see different types of credit. So auto loan, student loan, revolving, which is just like a credit card. So if you only have credit cards, that little section's not going to be as strong as if you had a credit card, an auto loan, a mortgage, student loans, those different types of accounts. If you have several different types of accounts, that's going to make your credit worthiness a little bit stronger. And then the last little section is new credit. So like I said, new credit plays a part because it will shorten the length of your credit age or history. So that's kind of what makes up a credit score. Again, the 2 largest things, the 2 more important things to really be cautious of is payment history, avoid making late payments, and keeping your credit limits 30% or less of usage. The next thing I want to discuss is credit score versus credit karma. So I have a lot of people that I talk to regularly that, when we pull their credit, they're like, well, that's not what, my Credit Karma says, or that's not what, my Experian app says. But what they don't understand is different types of creditors use different scoring modules when pulling credit. So there's going to be one scoring module used for if you're applying for an auto loan. Mortgage, we use a different type of scoring module than like a credit card company or a bank. So that's why you'll notice that your credit score isn't just consistent across the board everywhere. I actually like Credit Karma a lot. I use it myself. I think it's a great tool. Even though the score may not be accurate as far as the type of credit you might be applying for, it still has a lot of great features and it's free. and it helps you keep track of your credit. It helps you manage your credit. So what I like about it is it will, anytime I open a new credit card or whatever the case may be, I'll get a notification that something was opened under my name. And that way, if it wasn't me, you know, I know that it's fraud and I can fight it right away without it hurting me too much. I also like the fact that you can see all of your credit history right there in the app. So you can see all your accounts, you can see the balances that they have, and if you're getting to that 30% or higher, you can manage it. So it's a great tool. Like I said, it's free. It helps you manage it, even if the score is not 100% accurate to what you're trying to do. It's still helpful. So I do recommend you downloading that app and using it. And the next thing is do's and don'ts. So do's and don'ts of credit, I would say do check your credit regularly. You can go to annualcreditreport.com and request a free copy of your credit report once a year. It's a great way to just keep track of what your credit looks like. If you have anything that gone to collections or anything like that, you can manage it, you can keep track of it, you can keep those for your records, and you can set personal goals for your credit, and the credit reports will help you reach your goals if you have something to reference. So do that. Also, keep track of your credit. Like I said, Credit Karma or Experian or any of the other apps that you can use to keep track of your credit, because if there is that fraudulent activity happening on your credit, you can dispute it right away. So I would say do use a tool to keep track of your credit. So a big don't, I would say, is credit repair. I know there's lots of people that do credit repair, and in some instances it's great. But in most instances it's not necessary. So a lot of times credit repair will just go in and dispute all your derogatory accounts across the board. And then what'll happen is the creditors, if they don't respond by a certain time, maybe it falls off of your credit and goes away. So that sounds pretty good. But the problem is if you are in the market for buying a home and you have several derogatory accounts that are disputed, if they exceed a certain amount, the balance that's derogatory, we can't do the loan. You have to contact each of the 3 credit bureaus and remove all the dispute verbiage from the bureau itself. So I would say avoid credit repair if possible. There's people like me, loan originators, mortgage companies. We can actually give you great advice on fixing your credit yourself at no cost. So if you fall into that category, if you are in the market to purchase a home and you need a little help on your credit, reach out to me. Call me. My email, my online application, my phone number is at the bottom of this video. I'd be happy to take a look. I have a credit simulator and I can help you get to where you want to be.